The stock of the day has to be Rallis India. The stock has seen its biggest one-day jump since March 2015. And this is after the company delivered a strong operational performance in the third quarter with EBITDA doubling and margins too expanding. Yash Upadhyaya is here to take us through all the details and what stood out in the numbers this time around. Yash, over to you.
Good afternoon, Navneet. So, extremely good numbers from Rallis India. Like you rightly put, their revenues have grown as much as 28% on a year-on-year basis. Their net profit has more than doubled. But what's heartening is their operational performance. We've seen margins expand by almost 390 basis points, coming in at over 10.5%, as well as their EBITDA going up by almost 2 times to 56 crore rupees versus 28 crore rupees. Now, what's aided their performance in this quarter is that across the board, we've seen growth come in, not just their international business, which has been doing well over the last several quarters, but the domestic business, that too has managed to do very well in this time around. So their domestic business alone has seen a 35% growth in the third quarter, while their international business has seen a 24% growth on a year-on-year basis. Higher volume growth, lower raw material prices, as well as improved product mix, that has aided their margins, which have come in at 10.5%. And what's more important is that they've launched 2 new formulations in the quarter gone by. Now, what the company has also said is that they are on track to launching another new product this year, and that would take the number of new product launches for this year to 7. But going forward in the next 3 to 5 years, they are expected to launch 11 to 12 new products every year as far as their domestic business is concerned. Now, some of the key changes that have been seen in their strategy that Investec in its latest report has highlighted is the fact that the company has extended the credit period given to the dealers from existing 30 days to 60 days. They have also improvised and changed the incentive system for dealers, and on top of that, they have also managed to widen their distribution network. So they've added 330 new dealers in the 9 months of FY20, and that has helped them do very well. As far as their capex plan is concerned, they are on track to expanding their capacity in Dahej, where they will be setting up a new chemical plant for which the production is slated to begin in FY21. But that apart, their backward integration plant of metribuzin phase 2, that too is going to start commercialization. It has a total capacity of almost 500 million tons per annum, but it will start its business from February of this year. Having said that, also let's take a look at the graphic dashboard for Rallis India and how do things look like over there as far as the volumes and the analyst recommendation is concerned. So as you could see over here, the stock has gained substantially. The volumes too are at almost 2.9 times, which is the highest that we've seen over a very long time for the company. Let's take a look at the analyst recommendation, and across the board we've seen that 12 out of the 22 analysts that cover the stock have a buy rating. But what we've seen with today's gain is that the return potential of the counter has turned negative. Why is that so? Because the analyst target price for the 12-month period stands at about 189, and the stock has already breached that mark. It's at 222. So we could see either a re-rating happening over here, and a couple of brokerage reports that have already come in, they are extremely bullish. MK for one says that their growth plans, especially when it comes to their export business with the domestic market too showing healthy recovery, is likely to aid growth going forward along with their new product launches. That makes them extremely bullish, and that's the reason why we could see a potential re-rating for the counter, and most of these agri names, they seem to be doing very well.
Okay, Yash, Rakesh Jhunjhunwala will be a happy man today. He has over 9% stake in the company. And not to forget, it's a subsidiary of Tata Chemical, which is also sitting at its 52-week high.